This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Olusegun Okubanjo of Obsidian Capital. Olusegun, thank you for joining us.
Thanks, Hall. Pleasure to be here.
So what was your background before starting to invest in companies? What did you do before this?
Well, actually, I've been an investment banker for over 25 years, initially working in wealth management and the markets that I cover, which primarily are in West, East, and Central Africa. I began to observe that most of the wealthy clients and entrepreneur business owners were all founders of essentially new companies. And these clients were approaching the banks to access growth capital to grow their businesses or explore new opportunities. And I began to realize that there's quite a large opportunity to support these entrepreneurs who kind of sit in the space between top of the market as a business and also top of the market as an individual.
Great. So what excites you right now?
We're very excited about unlocking the potential in the markets that we focus on, specifically East, West, and Central Africa. And these markets tend not to attract as much attention as some of the other more interesting markets, say in Asia or the developed markets in Western Europe. And we believe that true impact investing can be achieved by solving real problems in these markets and at the same time creating wealth. And because the need is so large and the opportunity is so large, startup opportunities in this part of the world are so much larger in scale.
So what's your advice for people investing in companies? What do you tell them to do before they write that first check?
I think that the first thing is to take your time and to really get to know the team that you are going to back or support. These are people who you'll be working with potentially for quite a while. And you need to be sure that your objectives are aligned. Some people just want to make money, build a business, and sell it quickly. We are much more patient in our orientation. We want to work with teams that are looking much further out and are truly focused on making a difference. And so getting to know the team, getting to know what people's objectives are, their priorities are, how they work under pressure is important. And I think that's time well spent.
Very good. So on the other side of that table, what's your advice for people running companies? What do you tell them to do before they launch?
Initially, I'd say almost the same thing. So you need to know what you're looking for, what truly matters to you. Is this a business that really is just a money-making opportunity that you want to exploit very quickly, or are you trying to make a difference? And you should identify partners who will support you in that agenda. But they need to be clear about your idea and your business. But you should also be open to the thoughts and insights you receive from others. Because even if it invests with you, you can still learn from them and enhance your business based on those conversations you have with them. I think it's also helpful for businesses to be lean and focused and try as much as possible to build their business with as little outside capital as they can. It sounds counterintuitive, I know, but I think people are sometimes caught up in either trying to create a lifestyle rather than build a business, or ticking a box by saying they raised X million dollars and XY valuation rather than actually building a business. And I think that's really important to focus on that. And then the last point I would say is that I'd advise a startup to build a business that generates revenue. So we think that there are two types of businesses. Businesses, ones that make money by getting as big as possible, attracting a base of consumers and then selling to a larger player to fill a need in that larger player's universe. And then ones that simply make money. And we prefer to support those that make money. Because selling to larger companies is quite a gamble, and many businesses that are structured around that model fail to do so. We think focusing on making a profit is a great way not to fail.
Great. So let's talk about the state of investing today. How do you see the industry evolving and what changes do you see coming up?
I think it's becoming much more attractive to invest in markets in Africa as opposed to give aid. And many voices have sort of led to this. And so I think in this impact investing narrative that you're hearing, as it pertains to these markets, is more focused on trade versus aid. And as an author, Dambisa Moyo has written a fabulous book called Dead Aid, which he promoted these ideas and prompted more people and governments to think more seriously about replacing this aid-focused approach to these markets with real investment. And we're going to see some governments even transition from aid agency-led approaches to trade-led approaches. The UK government, for example, recently launched a huge trade finance fund, which is focused on the markets that we cover, as well as some others, which is a significant departure from this decades-long AIDS-first approach that they've taken. So I think the industry is beginning to see that there is money that can be made in these markets, and there's a desire for actual investment, not handouts.
Why is now the right time to start to invest in Africa? What's going on there that is driving investment? What growth is happening that you see?
I mean, Africa is the opportunity of this generation. I think, I can't stress that highly enough. I mean, this is a large population, over a billion, almost a 1.2 billion people. It's a very young population, youngest in the world, and it's getting richer and doubling in wealth every decade and getting larger. And there's demand for everything. So this is a market that's been overlooked, and we could argue as to why it's been overlooked, but it's open. I know it's open for business. And I think there's a lot of misperceptions that people have about the opportunities in this market, which puts them off from looking at it as a big opportunity. But many businesses that we look at today as being industry stalwarts make a large portion of their revenue from these markets. Unilever makes a significant portion of their revenue from Africa. Shell makes 40% of their revenue comes from the continent. Barclays, which is one of the largest banks in the world, makes over 40% of their revenue from that continent, even though they supposedly aren't in Africa. So it's a huge opportunity that I think has been overlooked. And for us, that presents itself almost as a barrier to entry, which helps us sort of keep off some potential competition. But I think people are beginning to see that the secret's getting out there, that there's a big opportunity in this.
Very good. So what is your investment thesis for investing in Africa? What would you focus on to deploy capital?
Well, we're a mid-market focused corporate advisory firm. We're not a fund, but we do work with committed capital sources. We are generally sector agnostic because of the scale of opportunities in the region, but we tend to be attracted to infrastructure and have done quite a bit of infrastructure transactions. Infrastructure can mean more than just roads and bridges, but even things like financial infrastructure, secondary debt market facilities, things like that, which we worked on. We are focused on businesses or transactions that are taking place in East, West, and Central Africa. We don't do much in the Maghreb because we believe that market is well served from the European markets. And we don't do much in Southern Africa for similar reason. And we like businesses that are already operational, but we will look at greenfield pre-revenue opportunities. I think the main, special attractive for us is that they have to have the capacity to make a significant difference in real lives. And I'll give an example. So there's one of the projects that we funded in 2014, 2015 was a solar photovoltaic power plant in West Africa, which now provides power to over 30,000 families. And this is a real impact. This is 30,000 families whose daughters don't have to perform labor-intensive work and have more time now to study and further their education because they have access to power. And those are the kinds of transactions or the kinds of opportunities that we like to look at.
Great. So what are the challenges in running a business in Africa these days? It's a new world for us here in the U.S. and always looking to understand about new markets. What will we find there?
I think the first one is, the operational challenges for many startup entrepreneurs or businesses. This is not a unique factor, but you have to be licensed, you have to be registered for taxes, you have to incorporate, you have to do all the things necessary to get a business up and running. And you'd be surprised by how many people just don't understand this or haven't done the work necessary in these areas before they get started. And then contracts and agreements. Africa has a very well-formed, most markets that we cover have very well-formed legal traditions. Because of the legacy of the colonial era, most of them have legal systems that are very Western in structure and very, very robustly connected to the British and the French traditions. And good contracts are very important there, just as they are anywhere else. But again, many people just aren't used to doing contracts because they were employees before they started a business. And they feel a bit uncomfortable being detailed. That's only when problems emerge that they realize that good agreements are necessary. Another factor I think that's a unique challenge, probably more unique for African entrepreneurs, is the importance of documenting good operations. For these markets, there are a lot of misperceptions. People don't think that the demand is there. They don't think the market is real. They don't think that people are operating legitimate businesses even. And sometimes there are questions about things that seem very basic to an African entrepreneur, but they're important questions to be understood by a cross-border investor. And so the teams have to be very, very good at documenting and structuring their operations so that investors can understand how they work and have confidence that they're well run. And then you have the other things, attracting a good team, actually generating revenue. But I think the biggest challenges would fall into those buckets.
And so you mentioned that Africa has everything and a need for everything. But if you had to pick a sector or application that you think is a great opportunity for investors to pursue, what would you put at the top of the list?
I think there's sort of two. I mean, I stand by what I said before. Almost any opportunity pursued in this region, there's huge opportunity to explore everything. But to answer your question, I'll pick two. So one of them is in the fast-moving consumer goods space, right? So you have a young population, it's fast-growing, it's getting wealthier. So these people are going to need more clothes, more food, more consumables. And that demand is growing. And so any business that operates in that space will do very, very well as they ride this growth cycle that Africa is currently in the midst of. And I'll give an example of a company like that. There's a company called Jumia. Jumia is basically Amazon in Africa, right? And they recently listed on the New York Stock Exchange. They're the first African tech startup to do so. And they listed a valuation of nearly $2 billion. So and that's an example of a business taking advantage of that fast-moving consumer goods space. The second sort of area or subsector that we like or find as interesting is infrastructure, which I mentioned earlier. Again, because of the same reasons. You have a large population, they're getting richer, there's more demand, they're growing. So power, transportation, telecommunications, technology, all of those spaces have huge, huge opportunities to make good return.
Sound like good opportunities. In the last few minutes that we have here, what else should we cover that we haven't?
What I would say is most people who have never invested in this region, their perception of the continent is driven by media and entertainment. And so, movies that showcase horror and war and chaos and disaster and disease seems to be people's data sources. And that's actually not the reality. It would be like a US investor deriving their understanding of the US market from Hollywood. That's not really realistic. And I would encourage people who are looking asymmetrically to look at educating themselves by just reading about these markets and finding out what the opportunities are. You'd be surprised how many businesses today that are operating could increase their profitability by just being open to that market. Not even doing anything more, just saying, we'll accept trade or we'll sell our products into this market. And that could grow their business. So I would strongly encourage people, investors, startup business owners to look at Africa for what it is, this generation's greatest open opportunity.
Sounds like a great new opportunity for the world to go after. So how best for listeners to get back in touch with you?
My website's the best way, which is www.obsidian.capital.
Okay. We'll put that on the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks, Hall. I'd appreciate that. Great speaking to you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halti Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.